Was the market's recent drop just a matter of time, or did the jobs report light the fuse? Chris Toomey of Morgan Stanley dissects the latest market pullback, arguing that a correction was inevitable and the jobs report simply provided the spark. But as investors digest this catalyst, will the market find its footing, or is more turbulence ahead?
Earnings look great, like you said. Mag 7 delivered, the rest of the market delivered. We had a great GDP number. Powell comes out sounding fairly hawkish. Everything looks like it's going the way it should. We've got the dollar now back to where it was in April. And to quote Lee Corso, not so fast, right? We're in a situation where, wait a second, we're looking at the labor market. What did the Fed see and what is the market seeing right now? Now, like taking into that consideration, though, we were in a really overbought situation, right? Volatility had come down. If you look at retail buying, retail has been fighting with the kind of the smart money, hedge funds, long only, in the sense that $75 billion has come into the market this quarter. That's at a 22% rate, 75% of which is going into passive. That's having a side-on effect with systematic hedge funds coming in. That's having a side effect with the short squeeze. So we saw meme stocks going up. We saw the most shorted stocks go up pretty dramatically. So we were due for a pullback. This is just the catalyst that's starting to realize that.
Yeah, I mean, the market often, when it's time and when the conditions are right, goes in search of something to kind of create an excuse for what it has to do on the downside. On the other hand, I do think that the jobs number and the revisions may have generated a bigger rethink of just exactly how resilient the broader economy is. And, where do you come down on that as to whether this raises alarms or it's just still part of the same muddle through trend?
Look, I think there's a real question with regards to what the actual damage is for tariffs and what it's doing for economic data. I think if you look at Q1 import data, imports were up about 35%. Q2, they were down about 32%. So, we're in a situation where we're seeing a lot of things moving in directions pretty rapidly. So the question is, how much did companies prepare for that, and how much is baked into these earnings that we're seeing, and what does that mean going forward? You're seeing some of this sectorally with regards to autos and airlines not necessarily doing as well, but companies that aren't as impacted by imports doing quite well. I think the real question is, look at Apollo and Carlyle have been talking about this, is that inventory drag, right? You've seen inventories come down fairly dramatically. We've got, a lot coming over from China. What is that going to be priced as? Is this a situation where margins are going to start to compress, or is the consumer going to start to feel it and we're going to start to see inflation come up? So this might be kind of the canary in the coal mine with regards to the fact that companies are starting to tighten their belts. They're not hiring as much, and this might be a lower growth environment than we were expecting.
You mentioned that, the Mag 7 delivered on earnings. The reaction to those earnings not necessarily been to celebrate right away, and not in every case. NASDAQ 100 basically is back to where it was before any of them reported earnings. What does that tell you just in terms of what was priced in, where valuations got to, and whether this will just right itself as we move on through the quarter?
Look, I think from our standpoint, if you remember, going into the year, earnings were expected to be about 10%. They dropped down about 2.7% during Liberation Day. They're now back up to 6%, right? So we're about 3/4 of the way through earnings. 80% are beating versus 67%. So it's a little bit of a broader kind of earnings story right now, not just the Mag 7. You could look at the Mag 7 and say this might be a situation where it's kind of buy the rumor, sell the news type of situation. But if you look at kind of the technicals, they were fairly extended. So I think this is probably a situation where maybe we see a little bit of consolidation through earnings and then kind of digest what's going on the economy.